In today's video, I'm going over the 4 different sell types on the Robinhood app, what each one means, and how you can use any of them to automate selling your stocks on Robinhood. Hey guys, welcome back. This is Eric of Investing Apps TV, and on this channel we talk investing apps, investing tutorials, and investing principles. So if you're new here today, definitely feel free to subscribe to catch future videos just like this one. With that being said, let's now hop into today's video on the 4 different sell types on Robinhood. Alright guys, so here we are now inside the Robinhood app, and I'm now going to show you the 4 different order types for selling on Robinhood. So if you want to learn more about these 4 order types, first of all, you want to go to the menu, click on the left-hand menu, and the very bottom option where it says Help. If you click on Help, and you click on Help Center, the very top option, it'll open up their support articles. If you click on the little search icon and simply type in order types, the very first article where it says order types facts, if you click on that, it'll open up a help article which you can read, which really does break down the 4 different order types for buying and selling, really simplifies everything. But I have this open on my screen on the website as well, so I'm going to close this for now in the app, but that's just to show you where you can go access it on your phone. Alright, so to do a selling order type, you're going to have to go to a current stock that you currently hold. So let me go over to my portfolio and just pick on a random stock. I'm going to click on QQQ. This is a NASDAQ ETF. So you're going to click now on sell. And again, if you just type in manually on the default sell page how many you want to sell and you click on the green arrow, it's going to execute the trade at market. You just have to swipe up. It'll sell at a market order. But let's go back instead. Let's go back and go to order types. And you'll see when it comes to selling on Robinhood, the order types have the exact same name as the buying order types: market, limit, stop loss, and stop limit. But they are a little bit different because you're selling now. So if we go back over here to our help article, again, it explains the market order. The order will sell at the next best available price. Keep in mind that this price you see when you place the order may differ from the following price. Okay, so what is that saying? It's saying if I sell at market order, my share of QQQ, which is my stock or ETF that I hold here in my Robinhood portfolio, if I sell at market order, it's not necessarily guaranteed to sell at the current price I'm seeing because the market does fluctuate, and in the time I confirm the sell to the time it actually sells, the price could fluctuate a little bit. So market orders are not always what you see when it comes to buying or selling. So if we go back to the second one for sell, order types, and now go to limit, before I go over this, let's go back to the help article. Limit order. Limit orders specify the minimum amount you're willing to receive when selling a stock. Okay, so it sounds pretty familiar, right? It's very similar to the buying order. So basically it's saying specify the minimum amount you're willing to receive per share. So as you can see, currently this ETF is priced at $153.77. If I go to limit, at what price point, what's the minimum I want to receive for the stock? I don't want to sell it at this point. I want to wait till it hits $160. So in this example, I would wait once the stock price of QQQ, once this ETF reaches $160, about $7 from here, it'll then automatically sell for me. I don't have to be by my phone. I don't have to go in there manually and sell it for me. And again, as you could see, I could set this to be enforced until the end of the trading day or good until canceled. So again, those options are also there for selling just as they were for buying. So that's probably the one I use most often in terms of selling is limit order because I like to sell it at my price point when I want to sell. Now let's go to the next one, which is stop loss order. And back to the help article now, it says stop loss orders trigger a market order to sell when the stop price is met. Example, XYZ stock is trading at $25. A stop order can be placed at $20 to trigger a market sell order when a trade executes at $20 or lower. Now, after reading that example, let's go back to the app here, and if you click on stop loss, it'll basically give you the same thing, a price below the current price that converts your order to a market order. So basically, you could think of a stop loss order as a protection on your investments. If a current stock you're holding on Robinhood is diving down for some reason, for any reason, and you don't want to lose a lot of money, you can set a stop loss ahead of time so that if the stock is diving down, it'll sell automatically. When it hits a certain point, it protects you from losing too much, so it stops the loss. That's why they call it a stop loss. So, for example, as you can see, the current price of QQQ is currently $153.77. Let's say if I see the stock starting to go down and I don't want to lose more than $13, I could put in a stop loss at $140. So the moment that this stock hits $140, it would automatically sell for me on Robinhood. So if for some reason the stock dives all the way down to $100, I wouldn't lose that extra $40. It would have sold it well ahead of time. Now, do keep in mind that it doesn't necessarily mean that it's going to sell at $140, but once the stock price drops to $140, the sell will be triggered. and your sell will go into the queue, and it may execute a little below that or above that. So it may end up selling for 139 or 141. But the point is, once the stock price hits 140, it'll execute the trade to sell for you at the next available best price. All right, so now let's go over the last option, the stop limit order. And let's go back to the help article here. And it says stop limit order. Stop limit orders will trigger a specified limit order when the stop price is reached. This may be used to limit the price your trade will execute for after the stop is triggered, but there is risk that it will not execute if the stock moves past it. And again, let's look at the example because this one's a little more complicated. Example, XYZ stock is trading at $25. A stop limit order is entered at a $20 stop and a $19.90 limit. Once the last trade price of $20 is reached, a limit order will be triggered to sell ABC stock when it is selling at $19.90 or higher. Okay, so basically again, this last one is an if-then transaction. So let's go back to our example here of QQQ. And you go to order types and you click on the last one, stop limit. Okay, so again, this is an if-then transaction here when it comes to selling. So as you can see, the current price of this ETF is $153.77. So let's say I want to say, if this ETF drops down to $150, that's my stop. Now it's asking me to enter a limit. Specify the minimum amount you're willing to receive per share. So if it drops down from 153 down to 150, I then want to sell it at minimum at, I could say, 149. But basically what this stop limit is saying, it's kind of a combination of a stop, loss, and a limit order, the previous two sell order types. What I'm trying to say is, if this ETF at $153.77 drops to $150, I then want to execute a trade at no less than 149. So basically, that's kind of, again, protecting your investments. If it drops to a certain point, it's then going to trigger a sell at a minimum price point that you want to sell at. So I hope that makes a little bit of sense. It's a little bit confusing, but again, you can read this help article. It really helps give you examples, breaks down the order types. But basically, when it comes to buying and selling on Robinhood, I feel like for most users, the market order and the limit order are going to be the most popular. Those are always the top two. They're also the most simple. The bottom two are a little more complicated, but for advanced traders, they could make sense for you. Again, most times you won't be using these last two options. Those are a little more complicated, but they are available on Robinhood. Most of the times you'll either be doing market orders or limit orders. I find I typically use those more often than the other two. But that's basically it when it comes to the order types on Robinhood. Those are the 4 types for selling. Again, back in the help article, it just shows you a little more information on how to cancel a pending order. So you can always cancel an order on Robinhood at no cost anytime you want. And that pretty much sums up today's video on the 4 different sell types on the Robinhood app. If you enjoyed today's video, definitely feel free to subscribe to catch future videos on more investing app reviews, tutorials, and investing principles. And also, if you'd like to see some of my other Robinhood tutorial videos, including my other video on the Robinhood buying types, feel free to check out those videos right over here to the right. Lastly guys, if you have any questions about any of these sell types on Robinhood, feel free to leave your questions down below and I'll be happy to answer those for you as well. Thanks again for watching, and I'll catch you guys in the next video.